GM and welcome to the deep dive of cryptoticker.io. Today, it's all about the Bitcoin halving. That's right, the event that the crypto scene looks forward to approximately every 4 years and which is historically pretty much the most important event for all of us. Today, we want to dive a little bit deeper into this topic. What is the Bitcoin halving? Why is it so important? What impact has it had historically? What makes the Bitcoin halving 2024 so special? And what information is particularly important this year? You'll find out all about this and more in this episode. So I would say, let's go and we jump right in. Let's start with the basics. What is the Bitcoin halving? How does it work? And what is it generally all about? The concept of the Bitcoin halving is actually pretty straightforward. At the heart of the Bitcoin network lies a process known as mining. Miners use powerful computers to solve complex mathematical problems to add new blocks to the Bitcoin blockchain. They are rewarded for this work in Bitcoin. At the very beginning, when Bitcoin was launched, miners received 50 Bitcoin per block. And this is where the halving comes into play. Every 210,000 blocks, which is roughly every 4 years, this reward is halved. From 50 to 25, then to 12.5, and so on. This design was deliberately chosen by Satoshi Nakamoto, the mysterious inventor of Bitcoin, in order to avoid inflation and ensure that Bitcoin is gradually brought into circulation over decades. Due to Bitcoin's underlying code, a maximum of 21 million Bitcoin can exist. Once this amount has been mined, no more new Bitcoin can be created. And we are currently at around 19.6 million Bitcoin. Of course, this sounds as if we will soon have reached the maximum amount, but the halving actually ensures that the amount of new Bitcoin is constantly being reduced. And due to this halving mechanism, we will not mine the last new Bitcoin until around the year 2140. But why is this even necessary and why do we need the halving? Well, by reducing the reward for mining blocks over time, the rate at which new Bitcoins are created also slows down. This model is somehow similar to gold mining. The more gold is mined, the more difficult and costly it becomes to find and mine the remaining gold. In the case of Bitcoin, the halving is intended to help limit the supply, counteract inflation, and maintain the value of Bitcoin in the long term. Since the launch of Bitcoin until today, there have been already 3 halvings, in 2012, 2016 and most recently in 2020. And on April 20th, 2024, there will be the 4th halving. Historically, we have seen the crypto market react with excitement and speculation at each previous halving, and this year is no different from that. Now that we understand the basics of the Bitcoin halving, let's look at the exciting part. The impact these halvings have on Bitcoin itself, the miners, and the entire ecosystem. Let's start with arguably the hottest topic, the Bitcoin price. Historically, halvings have had a remarkable effect on the price of Bitcoin. If we look back, we can see that there has been a significant price increase in the months following each halving. For example, after the first halving in 2012, the price rose from around $12 to over $1,000 the following year. Similar patterns were also seen after the year 2016 and the 2020 halvings, where the price reached new highs. It seems that the reduced block reward combined with an unchanged interest in Bitcoin is creating a kind of scarcity that is driving the price upwards. But what does this mean for miners? Well, in the short term, the halving could affect the profitability of mining. Halving the block reward basically means halving the income for miners, assuming the Bitcoin price remains unchanged. In the long term, however, a rising Bitcoin price could compensate for this loss. It's a double game of risk and reward, and many miners remain optimistic, investing in more efficient mining hardware or seeking access to cheaper electricity to reduce their costs. But how does the halving affect the Bitcoin ecosystem as a whole? First of all, it's important to understand that the halving is a key element of Bitcoin's security and economic model. By reducing the amount of new Bitcoins created over time, it helps to prevent inflation. This controlled supply mimics that of precious metals such as gold and just contributes to Bitcoin's stable value. Furthermore, the halving indirectly strengthens the security of the network. Although miners receive fewer bitcoins for the work, the potential increase in the value of Bitcoin motivates them to continue providing computing power to secure the network. So it's clear that the Bitcoin halving is a pivotal moment for the Bitcoin ecosystem, with far-reaching implications for the price, the miners, and the entire ecosystem. While the immediate impact on miners may be mixed, the long-term effect on the Bitcoin price and network security appears to be overwhelmingly positive. But especially in 2024, it seems like things are a little bit different than they used to be. So let's take a closer look. First, the details. The halving 2024 will take place on April 20th, 2024 at around 2:30 a.m. Central European Time. As with every halving, the block reward for miners will be halved from 6.25 to 3.125 bitcoins. However, in addition to this core fact, there are some special features that could make the 2020 halving unique. In contrast to previous halvings, the 2024 halving is taking place at a time when awareness and also acceptance of cryptocurrencies is at an all-time high. We just recently had the release of the Bitcoin spot ETFs by the SEC, and therefore quite exciting price developments even before the halving. We also have an increasingly mature infrastructure in the crypto space overall, from improved trading platforms to more advanced financial instruments, which will differentiate the halving 2024 from its predecessors. As for expectations, the speculation is, as always, varied. Some analysts predict that the halving could trigger a new bull market, similar to the past, with potential new highs for the Bitcoin price. These predictions are based on a principle of supply shortage and increasing demand. However, others warn against overly high expectations, as many factors such as regulatory developments and macroeconomic trends could dampen the effect of the halving. The halving 2024 brings challenges and opportunities for miners. The halving of mining rewards could exceed the profitability threshold for some miners, which could lead to a consolidation in the Bitcoin mining sector. On the other hand, a rising price and advanced mining technologies could mitigate these effects and promote a more efficient and environmentally friendly mining landscape. The halving 2024 is therefore not just a technical event in the calendar, but also really a moment that has the potential to redefine the price of Bitcoin and the entire cryptocurrency industry. With every halving, we enter a bit of uncharted territory, and in 2024 will be no exception. The question now is, of course, how to best prepare for the halving. What should we keep an eye on? What strategies are there? And what can we expect from the halving? In a context of the global economic uncertainties, including interest rate hikes and inflation targeting by various central banks, the impact of the halving in 2024 could be different than in previous years. These economic conditions could influence the way investors and markets react to the halving. Since the last halving, institutional investors' interest in Bitcoin has increased. The reaction of this group of investors to the halving could be significant, especially if they increasingly view Bitcoin and other tokens as digital gold, and their interest in Bitcoin and these other tokens as an asset class continues to grow. Historically, the halvings have led to the price of Bitcoin reaching new highs. This year, however, it was actually the case that Bitcoin reached a new high shortly before the halving. Whether and when Bitcoin could exceed this high and when it might continue towards that magical $100,000 mark is of course unclear and pure speculation. But we are definitely optimistic that the halving in 2024 could have similarly exciting effects as the previous halvings. Ultimately, however, we have to be clear and honest. No one really knows what will happen. Anyone speculating has to reckon with opportunities, but also with risks. So in this respect, you should really always inform yourself thoroughly before making investment decisions, and you should never make a decision based on what you have heard here. If you do so, we cannot possibly be held liable. Or, as we like to say, do your own research and no financial advice. All that remains for me now is to wish you a happy halving. Don't go crazy, make sure you don't fall for any fake news or scammers, and stay safe, all the best, and see you next time. Bye bye.